Welcome. Following is a video conversation with Karan, who is the founder and CEO of Tyke Invest. Tyke Invest is building a platform that allows for private equity investing to become easier for founders. Also, they have introduced a new feature called community investing, which allows a common citizen of India to invest in private equity startups with an amount as low as 5,000 rupees to be invested in these private equity startups. In our conversation, we spoke about why the current ecosystem, the complete private equity transactions are done, is flawed and there exists a gap in the market. Also, a small disclaimer, I have a request that you watch this video at a pretty low volume because the recording software that I was using had some issue with their audio.
Okay, the recording has begun. Okay, so first of all, thanks, Karan, for doing this, taking out the time, and we can begin. So first of all, for the folks, who will be watching this video, can you give a 1-minute intro about who you are, what Tyke Invest is, what's the potential?
Sure, Bhuvanyu. Firstly, thank you for having me here. Pleasure
pleasure
to be here. And about me, I'm the founder of this company called Tyke. My background is that I have pursued chartered accountancy and I worked at Deloitte in India. In Deloitte, I was working in their global business taxation department. At Deloitte, I was primarily working with a lot of companies, helping them restructure their systems, help them with their taxation queries, help them with their international settlements, and so on and so forth. While I was at Deloitte, I came across certain challenges where capital transactions were taking a very, very long time to be completed. And these capital transactions were happening in a very offline and a very obsolete manner, with tons of documentation and tons of approvals to be taken just for processing one transaction. And generally, these transactions came after the negotiation of the deal was done between two parties, right? So let's say you're planning to invest in me. We take 2 months to negotiate the deal, and the deal has been cracked, but it's still taking us the same amount of time to transact that deal, which didn't make much sense to me, right? Because if you agreed that you want to invest or you want to raise money, the transaction should just be so fast, right? But that was not the case, and that still is not the case. It takes approximately 2 to 3 months for the transaction to go through, and that's primarily because of a lot of offline, obsolete processes that have been set in today's banking system. That sort of became my problem statement, and I thought, what, in today's generation where you can probably purchase an ETF or a crypto or buy a NFT, which is almost worth your net worth in just 2 or 3 minutes. Transacting capital account transactions should not be a challenge, right? And that's what Tyke does. Tyke's goal is that we build infrastructure which allows capital transactions to happen in a very seamless manner, and it can happen completely instantly using your everyday payment modes like net banking, wire transfers, your debit cards, UPI payments, so on and so forth.
That's interesting. So ideally, are you like a marketplace, or are you serving to customers? And who would the customers would be in this case? Because startups would be wanting to onboard onto your platform, and on the other end, the investors who are regular angel investors or high net worth individuals, how would they actually come to know about Tyke?
So primarily, once we figured out the infrastructure for this, we call ourselves the Stripe for private investment. So it's more of an API play, right?
Okay.
But once we figured out this system, we did some research and we found out that today there are 3 most common types of capital transactions that take place. Number 1 is your traditional equity rounds, which is your pre-seed to maybe a Series D, Series E. And you have different types of fixed income rounds, which could be debt rounds, asset-backed leasing rounds, revenue-based financing rounds, stuff like that. And additionally, you also have community rounds, which is where you allow your users to invest in you. So and that's something which is democratized to 5,000, 10,000 rupees, etc. These are the three most common types of fundraising activities that take place today in a company's life cycle. So our goal was that because our infrastructure can solve for any type of capital transaction, at heart we should be able to power all of these, right?
Yes.
So primarily we power all of these transactions. So the way it works out is the way it works out is a founder creates a deal with us. We give him a basic flow where he creates a deal. He invites the investors who've already committed to invest in his company.
Okay.
Those guys come in, they sign up with us instantly. They use the platform for signing and transacting, and the investment is completed. So it's like a payment gateway. But additionally, what we do is for let's say someone chooses to do a community round,
Right.
we give them an option of being visible on Tyke's website. So if someone is doing a community round, they can also be visible on our own website and sort of get additional traction that we are getting. So that's a small extra push we've given. Primarily also having our own selfish interest, it will probably help us build our brand better.
Yeah, obviously, like it would be like a mutually synergy then that will enable these startups to actually invest. So just so when I had reached out to you, I saw this company Tax Chips that is listed on your website, and that by itself is actually getting a lot of recognition because of the Shark Tank episode that they actually featured in.
So tags is an example of a community round,
right,
which we decided to be visible on the website. That's exactly the example. Yeah.
Yeah, I got it. So so in terms of this thing, so as you said, you are an API play. When I actually went through your website and I was just reading up, so my first thought process was like, are you like going to compete with Angelist, because Angelist is doing something similar with the syndicates that they have? So in any way, is it in any way similar to Angelist?
No, not really. So Angelist today serves as one of the world's best discovery platforms, which means that a syndicate, there's a lead investor. He
Yes.
discovers a company, and the lead investor, because of Angelist's brand today, is able to discover the balance investors. And these investors come together and they agree to invest. But that's about it, right? Post that, the entire process goes completely offline, and it's managed in the offline manner as I explained to you. So we actually come in one step after the Angelist part is done. So it's a very different goal that both of us are serving.
Okay, so if I say that you are providing a software or a digital infrastructure to all these investments that actually happen in private equity rounds in these startups, that would be the right statement.
Absolutely.
Okay, because originally, when I even came across Tyke Invest, I did my research on that. So I was like, either it's going to be something similar to Angel Invest, because even the ads that you are serving on LinkedIn, it's like, start investing in startups with as little as 5,000. So I was like, will it compete with the likes of, crowdfunding platforms that we have in India? Or I need to talk about that. So
the reason we do that is purely from a marketing perspective, right?
Right.
Today, the same reason why we allow or why we work with companies and we give them a visible option for their community rounds is the same reason, right? We personally feel that it's very difficult today for a B2B company to have a very strong branding, right?
Yes.
And to have a name itself. We personally feel, because of this angle where we have the community rounds and people are investing in these companies, we personally feel it's going to help us in the long run by adding a lot of users, adding a big community to us, at the same time making us a household name. So tomorrow, because you probably invested in a startup with 5,000 rupees in Tyke, when your friend or you yourself are raising your own round, you'll think of us.
Yeah, I agree 100% there. So in terms of, so are there any kind of legal complications that arise, because startups essentially are most of the time are an illiquid investment. So like your money gets tied in.
There are no legal complications per se, but an investor has to be very well aware of the fact that he's investing in an asset which is illiquid, which has a high risk appetite and so on and so forth. But there is no legal challenge per se.
Okay.
You just have to educate or make the investor aware of these risks which are possible, which he may not face in other assets.
Okay. Yeah, so like I remember. So let me tell you why I even asked this question. So with Angelist, when it was in its just nascent stages, they Naval Vikant and his team had to essentially collect a set of accredited investors to be able to go out there and invest in these startups. So I thought that for your community play, for the folks who will be investing, so in that case.
So the logic is that the accredited investor definition comes in if you're using an AIF fund. If you're investing in a fund and the fund in turn is investing on your behalf. But these investments are not through an AIF; these are direct investments. So in direct investments, those criteria, those laws aren't applicable.
Okay, got it. So in December you just raised your round of 1.5 million. Take us through that process, man. So I would love to know, like, how was it? How did you actually got to meet with the investors? How did you gain their trust? How did you explain the vision for the company? What was that like?
Our vision has been very simple since day one, and we've always said that we want to be the Stripe of private investments, right? We want to have complete control of that transaction, and then going forward, everything that's happening with that capital, everything that's happening with that startup, we want to be able to sort of power that and control that, right?
Right.
And make it completely seamless and make it a very simple journey for him. So let's say a D2C startup is eventually going to be using that capital for maybe buying ad space on YouTube or Facebook or something like that, right?
Yes.
We want to be able to help them in powering that completely instantly, right? So our goal has been always very simple, that we want to digitize and automate the entire capital raising process, and how that capital is used, we want to have complete automation on that. So our goal has been very simple, Bhavanu, from day one. So primarily for us, I think whenever anybody is looking to raise capital, I think it's very important to bag your first 1 or 2 exciting investors who could even have a small check size, maybe just 5-10% of your round. But it's very important to get them on board, because the way any type of investment works in India and even globally, it's very network driven, right? It's a chain structure where it's FOMO is created. Your friends are doing it, so you want to do it, stuff like that, right? So I think it's very important to get those first 2 people who will create that FOMO.
Okay.
Then on the basis that automatically introductions are made, and automatically you fall in the right people's laps. Yeah.
Okay. Yeah, that's really interesting. So in terms of, so Stripe is a fairly big company, and you're saying that we want to actually become an API play when it comes to startups. So how big do you think that the TAM would be, the market size, and what is the potential here? Do you believe?
The TAM is actually north of $40 billion just in Southeast Asia.
Oh.
Because today every small micro VC or every small angel investor also has hired a small finance team.
Yes.
So they're paying them. So when I say that TAM, it basically includes the salaries you're paying them. It includes the forex charges you're paying to your banks. It includes the entire time spent, so on and so forth. And then it includes the entire documentations done. It also includes the opportunity costs missed, right? So because of all of this, the opportunity is massive, right? What we're trying to say is that today something which is taking you tons of documentation, tons of paperwork, tons of going to the bank, getting this done, getting that done, which is taking between 2 to 3 months today. We're saying that using our technology, it's going to happen in maximum 2 to 3 minutes, right? And completely digital. You don't have to go anywhere. It's like using a proper Amazon or a Zomato app, right?
Yeah.
So that is what we aspire to do. So because of that vision and because of what we want to do, what Stripe was able to do in the payment space, which basically means with respect to revenue transactions or expense transactions,
right?
We aspire to be something like that in the capital transactions.
Yeah, that makes a lot of sense. Got it. So is there any like not? I don't think in India. I don't think that would apply. But internationally, is there anyone doing something similar to what you
Yes,
might be doing?
there are a few players internationally as well. There's a company in the US called Party Round who's doing fairly well. There are many such companies all over the world, to be very honest. But nobody has been able to sort of crack these structures or these systems at a cross-border level. So maybe a US-based company has only cracked it for domestic US transfers, or a UK-based company has cracked this for domestic UK transfers. But to be very honest, capital always flows outside your country, right? Or
Yes.
comes from outside the country.
Yes.
Today, to give you perspective, most of our VCs, the Indian VCs that we so call them, they all have their funds outside India, and the funds come in from there, right?
Yeah.
So because of various governance laws and so on and so forth. So I think the 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 real power in this system is how does it work in that automated manner for any transaction, right? Same way how cryptos work today. It doesn't matter where you stay, right? That same structure was something which I think was missing and which we aim to bring in this loop.
Okay. So on the topic of cryptos, so do you think that you will, because from what I'm thinking here is that smart contracts have the potential to actually empower a lot of the backend infrastructure that we have spoken about. So is there any kind of blockchain-based technology that you would want to implement in your software that you are maybe not now, but maybe let's say 5 years or 6 years in the future? That would be
We do aim to have a crypto angle to what we do, definitely, and have a blockchain angle to what we do. We personally think it'll make a lot more sense once secondary transactions start.
Okay.
I think primary transactions, to be very honest, is not going to change anytime soon. I think primary transactions are still going to happen in the form of fiat currency.
Yeah.
And that's the reason I don't personally see any crypto coming in. It's like saying that Sequoia is going to invest in crypto now and not in dollars, right? It's a big bet to think about if you think like that. But if it were to happen, we would have to build for that. Is what I would say.
Okay, so if the proof of concept comes in, you will be like looking at that from that cycle.
Because as an infra play, you have to support or power what's currently going on, right? By the way, we already are giving our APIs to quite a few companies who are working in crypto or creator economy projects using crypto. So we have involved ourselves a bit, but it's still at the fiat level.
Okay. Yeah, that makes sense. Yeah, that does make sense. Yeah. So can you name some of these like creative economy enabled startups? Like if you're
I wouldn't be able to, because as a B2B company, we do sign NDAs. So I'm sorry about that.
Yeah, no, that's why I asked that if you're able to name. So okay, no, that's fine. That's perfectly fine. So in terms of how do startups like find out about you, and are you reaching out to startups? Is it, or startups are reaching out to you that we want to start with our investment journey, using your backend infra?
Yeah, so it's a mix and match of both at this stage. At this stage, I think what works the best is word of mouth and referrals, right? So we've been very bullish on that for now. We've not done much of outbound reaches or B2B marketing yet. To be very honest, we're building our brand first and then doing that. But at this stage, I think primarily what's working for us is our own network, referrals, and word of mouth.
Okay, yeah, that's interesting. And so are these startups so far that you are working with, are these based out of only India, or are they internationally?
No, so we already have built a system which allows cross-border transactions to take place in the same manner. So we're already working with quite a few companies based outside India as well. They're based out of Singapore or the US or something like that.
Okay, wow. So मतलब नाम अच्छा हो रहा है पूरा, मतलब नाम बन रहा है market में essentially, है ना?
Yeah, we're trying because unfortunately what happens is it's in a capital transaction is very difficult to control from where the money is coming, right? because the amounts are high. Everybody tries to save their taxation in some manner by working with countries who are probably slightly lenient in taxation, right? That's the reason it's very difficult to build a structure which says nahi hum only India mein kaam kar sakte hain, because then what will happen is the entire transaction will never be done on you. Bits and pieces will still happen in the normal traditional manner.
Okay. Yeah. So I agree here. So in terms of so backend infra, like tell me a little bit about the software. So you actually like come from a finance background. So how did you acquire, your engineering team that is going to work on the product as well as your vision in, implementing as well and looking at the top of the funnel and the bottom of the funnel in terms of, product roadmap? How are you looking at that aspect?
So primarily, answering your question first, acquiring users, acquiring talent has always been a challenge for every company, right?
Yes.
But I think it eventually comes down to if you're able to sell the vision, you're able to align them to a supernormal growth internally, spiritually, and mentally, right?
Yeah.
Then I think they do join you. So we're blessed with a very good and a very strong tech team, and a good product team. With respect to roadmaps, we always read what the market is telling us. Customer feedback for us is paramount. So we haven't tried building a roadmap for too long. I think we're pretty satisfied with what we have for now. But as long as we don't perfect it, as long as the product is not 10x, doesn't make sense to think further.
Yeah. So as long as the market is basically responding, and you are getting a good feedback on the product.
Exactly. So we only work on product feedback, and we're only working on what our users are telling us, what the market is telling us, without trying to use our brains too much at this stage. I think once that's saturated, that's when we'll start thinking of roadmaps.
Yeah. So tell me about this. So what the startup's journey is. So for example, I have a startup. I am going to raise $1.5 million in seed funding, and I need. So I would want to join you, use your platform, use your backend infra to do the entire transaction. How would the process for a newly startup founder looks like?
It's pretty simple. You come up, you basically sign up with us. You're given your own dashboard. Over there, you create your deal. Let's say you select options like it's a seed deal, equity round. Let's say you're doing a safe. You select a safe. The amount of investments is $1.55 million, and you start invite, and you basically select a button called invite investors. When you're inviting investors, you have two options today. One is you can add their email and they get the magic link, or you get a link which you can share with anybody you want. From both manners, these investors can come to know about your deal. They come in, they sign up with us. Once they sign up with us, their auto KYC is completed, and they can just directly come in, invest using the online gateway that you've created, and sign the safe, and it's done. It's as simple as that.
Yeah, that sounds really simple. So, and how much time does the whole process takes usually?
Less than a couple of minutes.
Okay, less than a couple. So I was expecting like at least it would take a day or two, maybe. Wow.
No, it doesn't.
Okay.
It's like someone invites you on Airbnb and you're booking a room, something like that.
Okay. Yeah, that's really interesting. So and in terms of so tell me about this community play, because I have worked with a couple of startups, looking after their communities, and I believe that this is the next big thing. So, what is your idea or what is your vision when it comes to community investing, that a D2C startup or maybe a B2C startup is going to go into that space, and they say that we are not going to rely on the traditional investors or the VCs. We are going to go forward and use the trust that our community has in ourselves and raise money amongst themselves.
So I'm fairly bullish on it, Bhuvanyu. And to be very honest, that's the reason it's a product that we have, right? Because we personally feel that all three types of financing, which is equity, debt, and community, they all run parallelly, right? I think every company is going to do all of them at one point of time in their journey, right?
Yeah. Okay.
So for me, I don't see it as a replacement of traditional manners. I see it as a supplementation
Okay.
of the other two, and that's the reason I think all three of them parallelly stay together. A community round is going to be successful only if you have the bigger guys backing you, right? So it works in a very, it's a chicken and an egg problem. But I personally feel that I think it's something which has to come to India, not just B2C, B2B companies are also doing this now. They're doing this for their own closed loop vertical supply chain. They're giving them community stock option plans. So primarily, it's being done by every company today. Everybody wants to retain uh, their users, their clients in some manner or the other, right? They all want
Yeah.
to incentivize them. So I think it's definitely something which is gonna become more and more popular. Something how ESOPs have become popular now.
Yeah.
I definitely see this becoming as popular as that very soon. Uh, However, I personally feel that all of these things have to play together, have to exist together for them to be very fruitful in the future.
Okay. So basically, it's going to complement both.
Yeah, absolutely. I don't see community rounds as a replacement. I definitely see it
Okay.
as a supplementation of option one, which is equity, or option two, which is debt.
Hmm. Wow. So okay. So so right now, I don't think this is the right question to ask, but okay, as you know, you've just said you're in seed stage company, but so what are the plans or in when it comes to growth and marketing? Because I'm a growth and marketing guy mostly because of that.
So the plan's pretty simple. We want to be able to capture as much as we can of this market this year. I think this year is where we actually come out of beta. We're more aggressive. We're acquiring users, trying new strategies. So for us, this year is going to be very pivotal. We aim to become a very wider name. We aim to be working with quite a few bigger players as well. So yeah, I think for us the growth metrics is to continue growing at our MOM rate, and at the same time be able to acquire a bigger share of the market, and most importantly create awareness of the same.
Yeah, so that would be really important. So when you say users, you are generally speaking about the startup founders, right?
Yeah, so
That would be
users can be startup founders. They can also be investors. They can also be lead investors. They can also be angel investment networks, other platforms that we work with. So, a user is not just subjected to be just the startup, it's the founder. It can be anybody who wants to empower their transaction.
okay. So anybody on the spectrum that is enabling private capital
Yeah,
transactions, that becomes your user essentially for Tyke Invest.
absolutely.
Okay. So um, yeah. So one thing that actually is bothering me, and I'm not able to like put a finger on it, is that still key. Will there be like if a community member decides to invest and they, let's say, community members, they do an investment round of 10,000, 20,000 INR, and suddenly if the startup actually does not work out, and so have you thought about what would happen in that scenario? Or
Yeah, so primarily, Bhavnu, what we're trying to do is we're not trying to change the nature of the investment, right? The
okay.
nature of the investment continues to be a risky asset. That's the reason we have an investor quiz that we ask at the beginning, which allow
Okay.
in the sign up process, which means that you agree to these risks which are coming in place, right? Uh,
Yeah.
our intention is not that we want to change the way the asset class works.
Okay.
Our intention is we want to be able to digitize it using technology, right? So for us, it's pretty simple, right? We are the ones who are powering it, but the transaction is completely between you and the startup. Now, if a startup tanks, and I'm sure some of them will, definitely startups will tank. Uh, the investor today has been given adequate education, awareness, procedures that have to be followed at that point of time in terms of getting their money's worth or whatever is possible to be liquidated at that point of time back.
Okay. Yeah, that would actually like be assuring for the investor.
Yeah, because uh, it's very difficult for us to come in and say we want to change the game. We can't do that. We want to come in and we want to change the way the game is played, right? We don't want to change the game particularly.
Okay, so there is no reinvention of the wheel going on. Essentially, it's just okay.
It's following the traditional manners of angel investment because they have worked, and powering that using our technology. So we're primarily a technology player. We're not a discovery platform or an investment advisor.
Okay, so yeah, that looks good. That would be assuring for everyone in this place.
Yes, Babu. Correct.
Yeah. So in terms of, I was going through some of the blogs. So when it comes to your blog, so who is the user that you have in mind that you have like written it for, and who are you creating awareness for in this case?
So the way we look at it is that we always write our content or build content directed to an everyday person, right? He could be an investor, he could have his own farm, he could have his own startup, his friend could have his own startup, so on and so forth. So our target audience is to just educate about how startup investing works, what are the procedures to be followed, and these things are a very pivotal part of our brand building, because if today we're able to make people resonate with Tyke when it comes to startups, uh, automatically, when a company is looking to raise capital, or when you're looking to invest capital, uh, be it with your friends, or be it in some network, or be it on the community round structure, you'll think of Tyke. That's how we look at it.
So essentially, it's focusing on creating a recall factor that Tyke becomes.
Yeah, because what we're trying to do is we're trying to create a new category of a new vertical of payments, right?
Yes.
By saying that capital transactions can be automated now.
Yeah.
Now the moment we do it, and we know we're fairly early in this, when there are bigger players who come in and try to disrupt the space, in a B2B, it's very difficult to have that branding. If you're not trying something very different, right? So that's the reason this has always allowed us to have our own branding. And today, people who use Tyke, they always write about us saying we used Tyke for this investment, right? They always mention us, which is sort of adding to that recall value, right?
Yeah. So so when you say bigger players, so who is the bigger player that you think that would actually come into this space once they see the potential of this market itself?
I actually have thought about this a lot, and there is no clear answer to this per se, but I personally feel, because it's a payments product, yes. I do see a lot of bigger players in the payment space looking at this, looking at entering capital transaction, because that's one limb which they've not done yet. So I definitely see a lot of, and today the payment space is so crowded. I mean, all of them are doing so well, and they're so heavily funded, right?
Yes, heavily funded.
Because of that, we feel that there's definitely alignment for them, because they're already managing your, like Razorpay is already managing your revenue transactions.
Absolutely.
To add another limb and say, you know what, I'll also manage your fundraise now. It's a win-win.
Okay. Yeah. So Razorpay, and so that would be an Indian name. And what about like Stripe? Would Stripe ever would consider Stripe and PayPal? That would also be.
Absolutely, yeah.
Okay. And so tell me about, if you can, I don't know. So if there was any customer stories here, or some struggle story, I want to know, because, when the audience actually watches the content here, they also want to know, the struggle behind what actually happened, your vision, because you started out as a CA, then you actually worked with Deloitte for a certain period of time. And then you decided that you're going to start up, you have a problem in hand, you understand that there is a gap in the market. So take me through that journey. That would be really interesting. I would want to know.
Yeah, to be very honest, there was no family pressure or anything on that end. But primarily for us, the biggest challenge was, how do we build this infrastructure which was not built earlier? For us, that was the biggest challenge, to be very honest with you. It was never about the vision or people not supporting us. We've had great support, but it was always about building the infrastructure at our end, right? I think
Okay.
any fintech product today takes some time to be built at an ideation stage, and then only you can launch a beta, right?
Yeah.
So I think we went through a similar challenge. It took us around 6 to 8 months to just figure out the right structure, the right way in which this infra can be managed. So I think for us that those 8 months would have been the struggle period, but I think our team's very optimistic, very positive people, and we've not really. I still feel that wherever we are, how much ever we've done, it's been a great journey.
Okay. Wow. Because you are actually the first founder that's saying that, it's been a great journey. Because let me give you an example. So I have spoken to founders from Bangalore and from Delhi. They're like, it's really hard to get tech talent. And most of the time when a tech talent is just about to join, they are just, switching for offers. Have you ever had experience?
Yeah. I mean, it's difficult to hire tech talent for sure, but I that's the reason I personally feel that. But I think that's a very common problem now. I
Yeah.
think even very heavily funded companies in their Series B, C level are have the same problems. So I don't. So today we might have an acquisition problem. They have a retention problem, right? That how do we retain? How do we retain these guys now? Money तो उनके पास already हमने दे दिया और क्या दे हमको, right? So I think everybody has those problems, and I think it's an industry-wide thing today because of technology booming.
Yeah.
But I personally don't see that as a starting up challenge
Okay.
because I think everybody is complaining about the same thing, right?
ये तो है बिल्कुल. So and so you have like so right now the core focus is on backend infrastructure and the tech play, and the word of mouth and inbound marketing that's been going on. And
Yeah.
so what would be the timeline when you say that now we should, at what point would you say that we can start outbound reaching out or connect with startups and partnerships?
This is probably around. So once you have that internal hit that a certain build has been completed,
Yeah.
which we think we're very close to reaching now, we'll start. So probably by April or May, we'll start. Yeah.
Oh, okay. Yeah. So, so your product is almost at its finish, like 85-90% is done.
So because it's very different types of use cases, right? I mean, the same structure is being used by you when you're not doing your own round. It's being used by an angel investment network when he's managing over 2,000 investors. It's being used by a venture capital fund for managing his LPs and his startups. It's also being used by other platforms as a capital gateway API, right?
Okay.
So building for all of these use cases, you have to have a very simple tech integration structure, right? It has to be just a few lines of code, and that's about it, right? That is also one of the reasons Stripe won over PayPal, because their goal was that they want to impress the engineers at these companies and nobody else, right? So I think that's our goal as well, right? How do we sort of build this in a manner where it has that level of plug and play functionality, at the same time is very low on code and very light on tech integrations, right? Because of these use cases and having tons of functionalities, that's the reason we haven't. I mean, we personally are working on this internally, and the moment we reach there, we will start doing some level of marketing outbound as well.
And what would be your strategy if you can share, if you believe in that, you can share this?
It'll be pretty simple, yeah. I mean, I think today initially we start targeting people who are already in the supply chain of fundraising, which could be investment banks, financial consultants, financial analysts, so on and so forth, right?
Okay.
I think partnerships with them in a very interesting manner. Something like Razorpay had did for its product Razorpay X, right?
Yes.
Razorpay Payroll, right?
Yeah.
I think that'll be a very interesting play for us. Yeah, see.
Okay, so it would be more like a partnerships play. You will be getting in touch with fintech startups and those in the financial services.
Absolutely.
Okay. Because so let me just say like why I thought of this. So like with Freshworks, it's a completely opposite process. So I am in touch with their Freshworks startups partnerships team. They are actually like building out their own accelerator program. They have created that, but again, it's a very heavily funded startup and had an IPO just last year. So obviously the strategy would have to be different. That's why I actually wanted to
So
understand
I
that.
think, yeah, I personally think that that we already have been able to create a decent amount of hype. People know about us, and
Okay.
we just have to keep hitting the right pain points at the right point of time, and I think it'll build up.
Okay. So what channels of acquisition are you finding that are yielding the best results, and just you are wanting to pound on that gear?
So I think Facebook works well for us. YouTube has worked well for us. Uh, and I think referrals and word of mouth marketing schemes have worked very well for us. So I think these 3 or 4 channels are something which have worked well for us, and we'll double down on them.
Okay. Yeah. So I believe we have actually gotten 45 minutes of the way through in the conversation, and now I do want to know that please do ask some questions from me, or because if you have something to ask from me, I would love to be able to answer you. I've gotten a lot of information that I'm going to process over the next 2 days, and learn more about the company.
No, yeah,
Apart from this
I think
podcast.
no, I think this was a great conversation, and it was great. It was great that I could get my own brains picked, because I think as founders, the reason we do such podcasts is because it actually gives us time to introspect and think in terms of our own decisions and what we've thought of, right? So
Yeah.
I I think that's the reason I personally do it, and it gives me time to figure out if everything that I thought makes sense, does it still make sense, right? So thanks for that. I don't have any questions per se, Bhuvanyu, but thank you so much for having me. And for any of the viewers who are listening to this and want to reach out to me, I'm at karan@tikeinvest.com, and we'll be very happy to take up conversations and sort of hear your thoughts on our conversation here.
Yeah, so I do believe I have an audience of somewhere around 18 to 25 years old, mix of marketers as well as certain programmers. So they will be really happy to teach out. So for them to actually get interested, actually talk a little bit about the culture that you are actually building as a company, what your vision when it comes to in organizational management is like. Let's talk about that a little bit.
So currently we're running on a hybrid office structure. I don't think work from home is going to survive for too long, because I personally feel that you learn much more by listening to other people's conversations, uh, rather than learning yourself.
Yeah.
So I personally think that it has to be a hybrid structure where people work from office, they also work from home. We give that flexibility, and at the same time, everybody has that level of freedom to take decisions. Everybody today in the company is enjoying that level of freedom, be it an intern or be it someone who's has 15 years of experience before working in Tyke, right?
Yeah.
So I think for us, we've been very cognizant of the fact that every person who comes should be allowed to say what he or she wants to say, and should be allowed to try their own structures and their own processes, even though mistakes might be made. So I think for us, I've tried to build a culture around my learnings at Deloitte, and I think for now we're pretty flexible in terms of our structures, in terms of the processes. But yeah, hopefully we're able to maintain that as the team size grows. Right now we're at 35, 36, but the moment we cross 50 is where you have to start thinking of aligning all of these things together.
Yeah. So I read this thing about. So I love this book by Ben Horowitz, The Hard Thing About Hard Things. Have you read that?
I haven't.
You should. You must read that book. That's just a phenomenal book. So there's this one thing that he said in the book that once your organization reaches the threshold of 100, that's when the tribe becomes a village. And when it becomes a village, you are going to need to appoint more and more leaders within. Otherwise, the village is going to break down and chaos enters. So yeah, you're in that stage, and I do wish you are able to like build that from a tribe to actually a village and a successful growing village at that point in time. my take on this work from home scenario is like that, humans are inherently social creatures, and most of our learnings is in throughout history has been in social surroundings that we are part of. And even when we were all working from office, learnings were happening through a lot of absorption, as well as being part of the meetings that was happening when you were interacting with people. And people are going to actually need that going forward, because when you are going to move up the ladder, see, right now a lot of freshers and early folks who are in their early 2-3 years of experience, they are going to experience a lot of enjoyment that we have the freedom to work from home. But in the longer run, when you are at 5-year 10-year benchmark in your career point, that's when you are going to have to develop your interaction skills. And having these meetings is fun for a while, but you are going to be leading a team, or you're going to be leading that department. That's when all these interactions become really important, because what all you have absorbed is really important. So that's my take on this work from home scenario. Even I don't believe that this is an ideal working scenario for any human being.
No, agreed. I completely agree. I think learnings from here, along with the learnings we had in the previous structure, which is an office structure, is going to be clubbed together.
Yeah.
And it's going to be a hybrid structure, and I think that's what we are also betting on at Tyke.
So, and you are based out of Mumbai, right? So you're
Based on Mumbai, but we have offices in Mumbai and Gurgaon.
Oh, you're also in Gurgaon. Yeah, so if you're ever in Gurgaon, we should definitely catch up, have a cup of coffee or something like that. And is there anything else that you want to actually, because as we are almost at the end of our conversation, so let me know if there's any message that you would want to give, if there is any book recommendation. Yeah, so a lot of the folks that watch my videos, they ask for book recommendation. Do you have any book recommendations for them? Do let them know.
I wouldn't recommend a book. I'd recommend a video. I think on YouTube they can watch this video by Peter Thiel, founder of PayPal. He's made a very interesting video for all the ambitious entrepreneurs looking to start their journeys. There's a video entitled "Competition is for Losers." I would recommend. I would recommend people to watch that, because I think it gives you a very interesting take of how you should position yourself in the market.
Yeah, so essentially the whole lecture was translated into the book 0 to 1 that was translated. So yeah, that's a wonderful recommendation. And folks can find you at Karan at tykeinvest.com, right?
Yeah.
So yeah, I'm really grateful that you actually took out the time to have this conversation. I had a wonderful time speaking with you. And so I do understand that you're a busy guy. So, with that, I will say adieu. I will pause the recording. And yeah,